Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at a morning range on crude. Now, it seems to be kind of a little bit of a broken record, but one big thing that you'll notice, we opened with a pretty big gap down. Yesterday, we ended the day with a very strong rise higher and heavy bullishness. And that heavy bullishness, well, they're not feeling too great anymore. We open a huge gap down, and that tells us two really big keys of information. First of all, we know that there are going to be buyers that try to buy in to try to just get their average down, hoping that they can get out, right? Try to get out at break even where they best can, and then call it a day and just avoid the loss. There are going to be other buyers that are stuck from yesterday that get in, and they've been buying in, and they open up this far down, they're just going to close the position. Take the loss, call it a day, go home, take the cuff on the chin and, come back tomorrow. So what that ends up doing is causing a range. We go back and forth with the buyers and sellers finding balance on both sides of trade, both with buyers selling out, we've got sellers that are selling in, knowing that the buyers are giving up, etc., etc., etc. So that information we need to see a little bit of proof of first. We open up very weak bull bar. Now we're starting to gain that proof. That's what we're looking for. We want to see weak follow through because we want to see the market in balance. And then we go into the buyers fading the lows of that, turning it back up. Now we're getting some really big clues. So now we're looking and knowing that we're probably going into a range. We need to sell high. We need to buy low. We get a huge bull move up, retest that prior low of day, and starts turning back around. That is a beautiful reason to sell into it, knowing that the buyers are very likely to fail. We're in a range, and we are literally at the high. That's a perfect place to be selling. So a nice little fade off of that move, right back down to the opposite side. But before they get to the other side of the range, we form another huge bear move down. Any bear breakout move or bull breakout move is almost 100% certainly going to fail initially on this type of day. So you're looking to fade this kind of move knowing that they probably don't have much bias. It may be just the rest of the buyers getting out at break even, causing a sell run. It could be buyers that are trying to buy this as a trend. They're getting stopped out, etc. But this is very unlikely to continue. And that allows you to buy into it with an easy pop higher. Then when they push down and they finally finish the job at that low of day, and you can see as soon as they hit it, buyers immediately started scaling into it. They tried to break out right there, that big old bear candle, and it's completely shut down by the buyers. A beautiful reason, buying low to fade that move right back up to the highs. And look at the run that followed afterward, just a huge run higher. But guess what? Now we're at the highs. So the first sign of bearishness is likely going to get sold. I know it's very difficult to sell in a move like this, but in this type of day, that's exactly what you need to be looking for, is a quick scalp back against it, knowing that it's probably not going to stick. Now with this kind of move up, it might bounce off that next pullback and go higher, but then that is just going to get sold as well. So that's kind of the environment that we're in at the moment. Very range bound, buy low, sell high, and know what the opposition is doing. If you have one side that is stuck in a move, on this type of day especially, you can use that hugely to your advantage. And this is a beautiful combination of technical analysis and market psychology. So hopefully you found this interesting, hopefully you found it useful, and we'll see you next time.